Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
And what's going on, everybody? Today it's Dan French here. It's the French Workbench Podcast here on a Saturday. What's going on, everybody? Wanted to thank you guys for coming in here and joining the show. It's most real and behind-the-scenes information regarding financing, real estate, money talk going on here in Las Vegas and entrepreneurs. Let's throw that in there. I'm your host, Dan French, and I want to go over and introduce my co-host, my good friend, Mr. Brett Jenny. What's up, buddy?
What's going on, Daniel French? Does anyone ever call you Daniel, or is it just Dan?
No, man. Daniel's that's like a family.
That's like a family book. Yeah. Daniel came home and did well.
And did his deed.
I'm just going to call you Daniel.
What have you been up to, man? What's going on?
Man, I have been trying to navigate through this market with my buyers. And it's a bit challenging, but you just got to be at it, man. You just got to have a positive attitude and not quit. So it's crazy with home prices, though.
Yeah, I just wanted to say a couple things. So let's talk a little bit about what's happening in the housing market with you later. We're going to talk about that. I'm talking with Andy Papasian. Andy, what's going on, buddy? How are you?
Good. Happy to be here and cover a lot of interesting things.
It's like your third or fourth time, isn't it?
Something like that, yeah.
Yeah, keep on having Andy back for a reason.
Yeah.
Well, Andy's very knowledgeable in the industry. Yep. So I want to really talk with Andy and just kind of talk with him about what's happening here in the housing market and what's going on with the appraisal situation here. And so, Andy, what have you been up to, man? Anything new?
Yeah, there's a lot of new stuff going on. What do you want to cover? Market first? Or?
He wants to get right into it.
Let's get right into the part that I'm most interested in, which are the new desktop appraisals that are kind of happening everywhere. That's a very important thing.
Absolutely. That's what I wanted to talk about today mostly. Yeah.
I was going to talk about, I want to say a couple things, though. Like, as far as Las Vegas goes, there's a lot of things happening in Las Vegas right now. Yeah. You see a lot of people out and just, weather's getting good, and do you do anything like hobbies? What do you do in Vegas, man? Like, what is your thing in Vegas to do?
Well, different things, but lately I kind of like to go to like car shows and stuff like that, or car gatherings. There's an interesting one every Saturday morning on Eastern.
Okay.
Yeah, people just bring their cars and they just show.
Where at on Eastern and what?
It's Eastern and.
Is it in Henderson?
Yeah, definitely.
Okay.
Yeah, when you get off of Eastern, you go south, or you make a right if you're coming off the 215.
Okay.
And it'll be on the left-hand side. It's in one of the shopping centers.
Okay.
It's like a couple of miles from the freeway, I would say.
Okay.
Something like that.
Cool.
Yeah.
So the reason we brought Andy on, I just want everybody to know, is we always try to give the latest information on financing real estate. We also talk a lot about money. And we have a show coming up on Thursdays. I want to promote that. And entrepreneurs are always coming on here. But Andy's coming on because we want to talk today about desktop appraisals and really what's going on with how people are thinking this is going to really change the market, but it also could be a bad thing for the market because it leaves a lot of openness, right? A lot of uncertainty about what could happen in this market. Now, talk to us about these regulations of what's happened recently, and give us the scoop.
All right. Recently, what happened is somebody came up with this idea that there's inequities in appraising in certain areas, and I believe this is what sparked the whole thing. Among a couple of other things, but the main thing is in my opinion, they're trying to eliminate the contact between the appraiser and the homeowner. So they've come up with this.
But does that really affect people? Like, as far as their thought process? I mean, the appraisers on their thought process if you meet somebody?
I should hope not, but apparently there's a small percentage that probably did, and instead of taking action or punishing those people, they're punishing a whole industry for some reason.
Like they do a lot of times, they overreact.
Yeah. So I think what this is going to do is if the appraiser doesn't actually see the house, it's going to be really difficult to give value to a lot of things. So I don't see how this is going to help anybody.
When did they change this regulation? Like, I know you said it was coming. It's
this is brand new. It hasn't really been implemented 100%, at least in our market here. I've talked to different lenders, and they're in the process of setting things up. So no one has really gone in full force with this yet.
So this is something that's already existed for a while. It just wasn't really used, or it had to be a certain specific criteria for it to be used before.
That is correct. Yeah, it was kind of like a drive-by appraisal.
Okay.
They were always out there, but they were not really used that much.
So let's think about the impact on this. Okay, so what I want to really illustrate out there to people that are looking at this or watching this show is take us through the process of what is happening and then what could the outcome be as far as how this could hurt our industry.
Right. Well, let me start first with explaining the way this is supposedly going to work. Okay. You have a choice. If you get an order for a desktop appraisal, I as an appraiser have a choice to actually do a full appraisal.
Okay.
Here's the thing. Fannie Mae says the minute the appraiser steps foot in the house, that's a full appraisal.
Okay.
Okay. So the other option is what they're suggesting is you're supposed to have a non-licensed person, okay, to go to the property and hold the camera. There's a software that you use, and it's $35 per use.
Okay.
And there's probably other
So
ones
they want
too.
to have a non-licensed person?
A non-licensed person is supposed to go to the house,
Because-
hold up their camera and take pictures in a certain way to react with the software that you're using. And then the software and develops...
Hold on. Sorry.
Yeah.
I'm trying.
You're just trying to figure this out.
Yeah.
So
Are you lost?
no. Why a non-licensed person take the picture? Doesn't that seem?
Well, here's the thing. They're cutting the interaction between the appraiser and the homeowner.
But because an appraiser is going to take manipulated pictures with a camera, I don't understand.
I don't know, to be honest. I don't know what the thinking is. But this is what's supposed to happen.
It's a picture.
Okay, you use the software which uploads the pictures the way you're taking them, and what it does is also it measures the house at the same time.
Okay.
I heard it's very accurate on.
So this is a software that you guys are now as appraisers going to get to.
We're going to use it. It's a per use thing. It's $35, at least this particular one. Okay. And then you also have to pay somebody to go out and do this for you, obviously. And before we could not use MLS photos for the comps. Now it's okay to use photos for the comps.
Really?
The thinking back then was if you use an MLS photo and let's say that house burnt after that photo was taken and the house is no longer
You
there.
want the current status and state of it. Yeah.
So they said, well, because of that, you have to take your own pictures and see where the actual house is and how it looks.
Yeah,
today.
because you want the information to be real.
Right. Now, all of a sudden, it's okay to use that MLS photo.
So why do you think they changed that? Like, why was it a problem before?
Apparently,
and now it's okay.
Somewhere in Northern California, the Bay Area is what I heard.
I read about that case.
Yeah, there was supposedly appraisers that were biased. And so
but that's just one location though. That changes the whole
I
industry.
read that article, and to be fair, it was like different neighborhoods being compared.
I don't
it
know.
was like it wasn't within like the same. It was different neighborhoods that were being compared.
Right.
So
I'm thinking that's just the excuse for them to do what they're trying to do. But whatever. I mean, if somebody does something wrong in the past, you got called to the carpet and you got maybe even lose your license. I don't understand why that did not happen in this case. They decided to change the whole industry. The other bad part about this is the appraiser, when he's at the property, we're not just measuring and taking pictures. We're making notes of what we see, like the type of flooring it is, the quality of the flooring. I mean, you've got laminate
and that's
flooring.
all based off of experience.
Well, absolutely.
Knowledgeable training and experience.
Absolutely.
That the other I know.
I go into the house and I could do a typical little house. I can be in and out within 25 minutes or so. And to some people that might look like, well, he's not doing his job. No, because I know exactly what I'm looking for, and it doesn't take an hour to figure that out.
Exactly.
So, but anyway.
So let's go back. Okay, so I want to really paint that picture for the audience. So what was it before? You're saying that you could walk into a home, you couldn't use the MLS pictures, and you would have to do a thorough, appraisal, in person.
Right.
Now, what is really different for people out there that when you walk into now? What is the policies now of what you do? How long is it? Tell me the step by step of what you do today.
You mean for the new desktop?
Yeah, for the new desktop.
Right, like I said, somebody has to do this. Either it's the homeowner, which that's not going to happen, or you're going to hire somebody, a non-licensed person, to go out and do this work for you. So their thinking is by having someone do the groundwork for you, you're going to be able to do more faster or more appraisals for them, which is kind of ridiculous in its own. Because all you're going to be doing at home is just typing reports.
The groundwork they're having you do isn't what takes a lot of time.
No. So anyways, in my opinion, it's kind of ridiculous. It's going to drive down the quality of appraisals.
Yeah.
It will.
You're just going to be a form filler.
So this is what people are thinking, is that if you're not, if this is you can kind of manipulate and through the software part of it a little bit, and then maybe appraisals aren't going to be as accurate as maybe they have been. Is that going to potentially happen?
I believe so, yes.
I guarantee it won't happen.
Yeah. Because, a lot of times when you take pictures of a home, even though you've been at the house and it didn't look really good, in the pictures, you say, oh, wow, this looks not that bad, So relying on pictures like that,
If you move into a neighborhood and you've spent 3 years of pride sticking into that home and redoing the kitchen and the deck and all these things, are you telling me that you want your appraisal to come in around this value of Joe Schmo down the street who didn't do anything?
So
come on, man.
When I'm at the property and I see the kitchen has been redone, the bathrooms have been redone, my first question to the homeowner is, how long ago was this done?
And what did it cost for you to make it?
Yeah, and the cost
Well,
is really not
so that's not even going to come into
There's
consideration.
no
then.
way, yeah.
So,
There's no way.
the wear and tear or the upgrades and things like that in a house.
You won't be able to tell that from pictures. There's just
Wow.
no way
So
you're gonna
and no
tell
matter
that.
what so if you put money into your house, it's really it's not going to even be taken in consideration.
Not really.
Really?
Not really.
Dude, you have no idea how much it's going to make a difference. It's not fair, man.
Unless you have a house that's got these beautiful granite countertops, and the rest of the pictures in MLS, they all have like laminate countertops or whatever, which doesn't happen. But I'm just saying as an example. Yeah, then maybe you can give it some value. But otherwise, if they all kind of look similar, you're not going to get any value, even though you just spent $40,000-$50,000 upgrading stuff in your house. So.
There was an article that came out. And what they were talking about was that this could really change the industry altogether. And you could start to see that there's inflating values coming into play. And then there's going to be huge separation. I mean, what do you think? Because I was reading this article. I mean, do you think there's going to be a huge problem for across the board for appraisers now,
I believe
value-wise?
so. I believe so, because our job was to look at the property, evaluate it, do the analysis, the comparison and all that, and come up with a value. Now, in this case, all we're doing is, you can get a non-licensed person to do this. They can look at some comps, whether they're experienced or not, and say, well, okay, this house looks kind of
Well, the devil's in the details, because you can make an appraisal look one way or you can make it look the other way, but it really comes down to the details. And what they're saying is we don't really need the details to make that decision.
Right. Oh, and the other thing is, now they came up with, they want all measurements to be ANSI standard, which is what I've been using all along.
They want what? What's that again?
ANSI is an acronym. It's the way you're supposed to take measurements, the rounding, and there's all kinds of guidelines to it.
Sure.
And I was trained like that, so to me that's nothing new. At the same time, they're saying we're going to take pictures now of walls and windows and stuff, and the software is going to figure out the square footage. That just doesn't make any sense to me.
How long is it going to be before you just start taking pictures and then because look, you got artificial intelligence coming in.
Yeah.
Is this for, because we already know that for primary residence, this is what it's for. Is it going to be for secondary homes investment, triplex, fourplex, or is it?
The criteria, I'm not really sure how this is going to happen. I believe every lender is going to have their own criteria. They do not have to order these desktops all the time. They can make that choice.
So it's not a standard then across the board?
It's not a standard across the board. We're still going to have regular appraisals.
Really?
Yes. Now, I can't see like a $1 million, $2 million house being done this way either. Okay. So this is probably going to be for cookie cutter type of deals. I'm not sure who's going to make that decision or what they're going to base it on.
So I got a couple of questions about it. So out there we have what's called an AVM, which is an automated value.
Right.
And a lot of times you're getting these on homes that are newer homes. Can you explain when some homes will get that? So what that is a lot of people are like, oh, I got to pay $550. Brett and I were doing a deal, and they got an automated value, right? And so when do you typically see that? Because we get the notification, but what homes are fitting that criteria where you don't have to get a actual appraisal?
Right. Okay, the AVMs, they tried this. If you remember several years ago, they tried real estate agents to give them these values for $50 a pop. Okay. That didn't work out so good. Yeah, BPOs.
Broker price opinion.
Right.
It was $50 a pop and lunch.
Right. That didn't work out so well.
It literally was.
You know what's so crazy about that, though,
I remember
is the people that got those BPOs back in the day when we crashed, they actually ended up making the most money.
Yeah.
Because they were already had those accounts set up.
Right.
Yeah.
Exactly.
Yeah.
So it's crazy.
Dude, they do like 4 or 5 in a day. I mean, you get $250 a day, 5 days a week.
Sure.
What's up?
In addition to selling homes or whatever.
Yeah.
Well, you can see how that worked out, right? That went away. So to answer your question, the AVM, if you look at Realist.
Yep.
Okay.
Okay.
Access
Realist, yeah.
It gives you an AVM. It gives you a low, high, and what the medium value is. And I kind of look at that sometimes, especially on the upper end.
I do all the
properties.
time.
And I compare it to where the comps that I used, which are the most current and the closest comps and all that, the adjustments that were done. AVMs don't apply adjustments. Okay, that's just raw data. So sometimes they're close, a lot of times they're not. So I would not.
It
go by
depends.
that.
Yeah, I check both.
Okay, so
just
I've been
to see.
seeing a lot of swings, right? We're seeing big swings in some cases on appraisals. Everybody's look,
Right.
knock on wood. I'm not going to knock too hard on this thing. The thing will shake.
Right, yeah.
But I've had no problems. Again, knock on wood with appraisal value.
Sure.
And so for me, I'm looking at it going, man, I'm very lucky. Now, I also saw though that we had an appraiser go out and say, okay, this appraisal is going to come in way low. We're talking like $1 million home, custom. Okay, we get it. And then the appraiser actually canceled it. They actually said, I don't want to put my name on it.
Right.
I'm like, wait a second. You can go through the process and you can take the assignment, but then they canceled it. They didn't want to be
They
audited.
didn't want to be responsible.
They didn't want to
if
be
everything- it's
responsible.
Too much liability
Well,
for them.
Right.
because what's going to happen is the borrower, whether if it's a refi or a purchaser, they're going to come back and start arguing with you why this property should be worth more.
They're just saying it's not worth the headache.
Yeah, exactly right, and you have the option to do that.
Yeah, I've done this before, and I know what's a headache and what's
I recently had one.
Yeah.
Okay, it was they offered close to $2 million for this property. The agent knew it was going to come in lower, but they just didn't know how much lower, and they waived the appraisal contingency. They were off.
The buyer did?
Yeah, they were off by $450,000.
Holy!
So
wow, dude,
when
that's
they-
crazy.
when they were
The buyer waived the appraisal on that.
yeah, and
Who's
the-
their agent?
Yeah, I'd have an issue with that agent.
Oh my god!
Well, that property did close, so they came out of pocket and
They
Shut
still
up.
did it.
Shut up! They brought in
in addition
$450,000.
to their down payment.
Shut up.
Yeah.
Wow, that's crazy.
So
listen, so then they had another appraiser take it.
Wow!
All right, same property came in at value. So we're getting all this negative publicity, and that's the weird thing is like,
It is, yeah.
okay, you're giving us feedback. You don't, and we were even paying this appraiser more money because they always look at the scope of work.
Sure.
Right. Go out, look at the property. It's like
Yeah.
$1.5 million, and still,
Yeah.
that's the issue. And I just don't understand where appraiser's mindset is, where some can see the value and justify it, and some can't. I thought it was comped out all right, but
Well, the thing is, I don't know the situation obviously, and I don't know how far the first appraiser got. But if you've got enough comps within the subject market area, that should give you a pretty good idea of
Yeah.
where this is going to end up. Now, the second appraiser, I don't know what they did. They could have gone out and hunted for properties to match. So if something ever came, if somebody decided to sue somebody one day and they started analyzing that, if he went out and found comps,
So
to
yeah,
make
it's one of
this
those things where
work,
it can go. You can make an argument either way.
you can, but the problem is if there's an issue somewhere down the road, that appraiser is going to be responsible.
That's what I'm
for
saying.
that.
Is down the road if there's an
Because-
issue, it can be argued either
Because
way.
any attorney is going to look at it.
Yep.
They're going to pull up comps for that time.
yeah,
and
but
they're
would it
gonna
get to
say-
an attorney? That's the question. How many of these really get to an attorney? But they could,
They
right?
may not, but see, this is fraud. And I'm not saying that appraiser committed fraud. I'm just saying if there was enough comps in the neighborhood and he ignored those, he or she, and they went out and hunted for special properties to make this thing work, that's fraud.
There's a difference between what's there and what I'm going to try to make work there.
Yeah, my question would be, why did you not use the comps that were available? They're current, they're very similar. Why did you have to go 3 or 4 or 5 miles away to find these comps? That's fraud.
That's
right
the
there.
question you'd have to get around legally.
So
Exactly right.
here's the other question I have is that you're starting to enter in a market where we all know that $1.5 million, $2 million is not uncommon in
No,
these markets.
correct.
You know, people are looking for them. You go to new home tracks, you know,
Oh, yeah.
all the
Right.
time. Now, obviously, we're not going to go to new home on this one. If you're doing a resale, okay, and you're looking for a house that's similar in square footage, and you can't find one, say it's a little bit more custom or it's got its own,
Sure.
its own style.
Right.
How far out do you go?
You can go as far out as you want. You just have to be justified and you have to explain why you did it.
So you start with the closest, and then you work your
Right.
way out if you can't find.
Because the underwriter and their appraisal department
Yep.
is going to analyze your report,
Yep.
and you're going to get a phone call if you didn't explain
you just have
it.
to be justified of why. Because
Right.
I had to go that far out because I couldn't find anything
And
closer.
if you can explain it,
Yep.
they're going to say, okay, amend your report, put your explanation in, we're cool with that.
Yeah, but when did, like if somebody was like an underwriter was like, hey, I don't trust this, you can go and try to get it revised, right? You can always send in your comments. But I think the thing is, you have such a separation there. you have a time period. It's usually what, 6 months that you can go back.
That's the guideline. Yeah.
Yeah, that's the guidelines. Now
You can exceed it, or you can make it 30 days, depending on your market.
I always do 3 months and do it for my buyers.
Right. Yeah. That's smart.
Split the difference.
That's smart. Exactly. Yeah.
So what I see in this market, and especially with this change, because this is a big change,
it is.
that might be a bigger problem moving forward. Because now,
Yeah.
look, if you have a value like this and you're just going on an automated value, or you're going off a value like what you're talking about,
Right.
wouldn't it open up more doors for problems, especially in these $1.5 million, $2 million homes?
Absolutely. I would not even touch it. In fact,
There you go.
In the past, whenever we got a drive-by on an upper end property, I used to decline it.
Really?
How are you going to compare
Yeah.
this?
Because he
If you
doesn't want to have
haven't
to defend it, man. If anything ever.
How would you compare this
Yeah.
property?
Yeah,
if
but
you
where's
haven't seen
that?
it?
Where's that number at? What if somebody said, "I'm gonna pay you $2,000"?
I don't care what they pay.
Yeah.
I'm not taking it.
You're not
It's
taking it.
dude,
No, I'm
it's
not
not
taking
worth the
it, man.
risk.
I'm not taking it.
Yeah.
That's the same as somebody give you, I'll pay you $2,000 to hit this value. I'm not doing it.
Yeah.
It's not worth it.
So they're saying basically, when you show up, that you're taking the human element. You can't have any. Do you feel that appraisers are persuaded a little bit with realtors meeting them at the property, or people?
No.
in-house? Not you, but
Yeah.
do you think in general, like maybe sometimes that value's fluctuating?
Maybe there's a small percentage, but I would not say.
Yeah, I think
it's
there's
a
a difference
problem,
between
so-
showing up prepared, like if it's a
Right.
remodeled house, showing up prepared with what they stuck into it. But other than that, I mean, they're not going to.
Oh, I have
Yeah.
realtors leave me a package every single time, like,
Yeah.
and that's fine. I mean,
Yeah.
I even say I tell realtors sometimes if it's a purchase, right? I say if you've got any comps you want me to consider,
Yeah.
either email them to me
Yeah.
or leave them at the property,
Yeah.
because I don't want to hear from you afterwards, because I'm not even gonna look at them.
Yep.
Hey man,
So-
I'm gonna show up with a. Hey, you want tickets? Where do you want to go?
No.
Yeah, no, it's
That's
true,
not gonna do
dude.
it.
It's true. Yeah.
No. I mean, they'll leave me a package of what they've done, to, receipts or
Oh,
whatever.
I see what you're saying, but they don't.
Comps,
They're not. They're
things like
they're
that.
not trying to like.
Oh,
hey,
no, no.
okay.
No, but like,
It's
I mean,
what?
that's justified. It's like new home builds provide you what's stuck into it and this and that. So there's
Absolutely.
difference. Hey, we
Absolutely,
remodeled
yeah.
and just so you know, here's what we
Sure.
stuck into it, blah,
Yeah.
blah. That all applies.
Right.
But people don't, realtors, it's like, dude, people aren't going to sit there and give
No,
you.
I've never had a problem where they're
'Cause
trying
they
to
like
bribe
you.
me. Yeah, they're not bribing people or whatever. I've never had an issue.
What
with
about,
that.
okay, so this thing was all, there's something else derived from redlining. And I'm not going to sit here and go into the topic, but you're saying back, I think what you said, San Francisco, was it? Or
I think so. Somewhere
in
in
San
the Bay Area,
Francisco.
Wait, you mean San Francisco has a problem?
Yeah, hard
with
to
something.
believe.
They have
to
many
believe, yeah.
problems, but let's not
Really?
get into that issue. You know, what I
Yeah,
mean?
they've got a problem with the current system. Imagine that.
California as a whole has got some serious things to think about. But
Yeah.
let's talk about that situation with the redlining part of it. I mean, does that really happen where appraisers are going into certain areas and inflating or deflating value?
I cannot imagine it, but I
Right.
cannot rule it out because people are people. and
Yeah.
Some people have different ideas. I mean, if you're using comps in a particular neighborhood and your comps are, let's say, between 1 and 5, that's just a number I'm throwing out. How do you come up with the value of 1 or 2 if your comps support, whatever, a specific range? So if there's an issue with an appraisal, usually the lender will call you and say, hey, what's wrong with this picture here?
Yeah.
So how can you be at the point where you're doing appraisals that are so undervalued? Like, what are they based on? I don't understand.
Well,
Drive-bys.
I think. Well, listen. Here's my thing: is you look at the value, and everybody always says, "Well, how did it come in so low?" The legwork that it comes for being a realtor, because you're doing the comps as a realtor, and then you're providing these comps to saying this is what I think the value would be. A lot of times it's way off. Now, in this market that's an appreciating market, is there more flexibility to say, well, we can probably give the value just because, look, we had 23% increase year over year in prices in homes.
Right.
Does that really help at all?
Yeah, I mean, we do time adjustments all the time.
Yeah.
But here's the thing: in order for you to be able to apply a time adjustment, even though you look at maps, there's a service that Lawyers Title, I believe, provides. They provide you a increase.
Yep.
Shows you percentages of every zip code. I use that. I rely on that, and I update it as often as I can. But here's the thing: in order for you to be able to put a positive time adjustment on a comp, you have to show that the market values are still increasing.
Yep.
And like I said before, I use this other software that does all the analysis for me, and it has the current 3 months, has the past 4 to 6 months, and then 6 to 12 months back.
I see.
So if the timeline shows the properties are still increasing,
Yeah.
I can put a time adjustment. No one's going to question it.
See, as a realtor, I do a little bit different, but it doesn't matter because I'm not the appraiser.
Yeah,
I look at the ones that have current accepted offers and ones that are active, and I see their prices.
That's how we used to do it manually.
I
But
see
now,
where it's
now
going.
that there's
Yeah.
software, I just let the software do the
Yeah,
analysis
that's true.
for me. You know.
I just go to Zillow. Whatever Zillow says.
Yeah! Don't get started on Zillow,
Yeah,
man.
Zillow
I'll
is a
tell you a few
different
stories
animal.
about Zillow estimates.
Yeah.
Why need an appraiser when you guys estimate, right?
Dude,
Yeah.
Zillow
Okay.
estimate, here's what I say to people with Zillow estimates. Believe what you want to believe.
Right.
Because you say one way or the other,
Let me
people are
ask you
going to.
this. If you were a billionaire, okay, and you were lending money for people to buy homes, would you rely on Zillow or would you want a really good opinion?
Oh, for me, I mean, I
Hell,
can
I buy
industry.
Zillow. Make my own damn estimates.
There you go. That's
Right?
it.
So I get what you're saying. So let's go back. So what are you see a lot of appraisals way off today? I mean, because there's a lot of, I hear horror stories. I got other agents I work with. You got other people. I'm, out there in the field too, just working with, Brett and everybody on the real estate side. We always have to look at things like, okay, well, is everybody suffering from not understanding what this market's doing or just inflating it so high? Because when Brett takes a listing or we take a listing, Brett takes a listing and let's say, hey, I'm going to list this home for whatever the value the seller wants. But that doesn't always mean you're going to get that, right?
Well, you said something very interesting just now. You said we've been seeing low appraisals.
Yes.
The way I look at it is I see overpriced offers. It's not the appraisals that are low. It's the offers that are high.
No, it's what someone's willing to pay. That's the price.
Exactly. You're right. But here's the deal with that. If the appraisal comes in at, let's say, 300,000 and the borrower, the buyer loves this house, they think it's worth 350. Fine, pay your 50,000 on
Sure.
the side. I don't have a problem. But you're asking somebody else to pay for this house, in this case the lender?
No, what
So
I'm
the lender's
asking
not
for,
gonna-
I guess it depends. So if someone comes along later and it's 4 months down the road and now there's 4 others that support the 350, then yes.
4 months later,
They are
but,
asking
but
you,
the appraisal
'cause
was
that's
a
what it's
snapshot
worth.
of today, not 4 months later.
Yeah, so what I'm saying is, okay, so yeah, right now, then no, because you only have one case where someone's willing to overpay and the rest of them don't support that, correct? But say in the next 3 to 4 months, you have 3 or 4 other ones that do pay that now. That's the new price.
And that's fine. Those are going to be the new comps.
Yeah.
Well, but let me say this. So I'm
it's what
going to
someone
stump
who's
you
willing
both.
to
I'm
pay
going to
is
stump you
what
both.
started it.
Okay, what if you sign in a contract that says we're waiving the appraisal contingency? So then it doesn't really matter. Like the appraisal's there.
Correct.
You still need it.
Right.
If you're getting a loan, a bank wants it. I think if you're cash
Sure,
buying.
yeah. That's
right.
But still, if you're willing to pay it, then it doesn't really matter.
That's what I'm saying.
And
It's-
so now it's just out the window, right?
Exactly.
Yep.
And now that becomes a comp. And down the road,
Yeah.
like 4 months later, if 3 or 4 other people did the same thing, those are your new comps.
And that's why things have kept going up.
Exactly.
Because of that scenario right
But
there.
when you're asking someone else to pay for your house, like the lender,
Right.
okay, they're saying, okay, I'm only going to pay up to the 300 minus your down payment. If you want to pay the extra 50, go ahead.
Well, in a
Fine.
sense, how are builders not doing that with lot premiums?
They're doing it. They're getting these ridiculous lot
But
premiums.
appraisers are giving them the value of the lot premiums, and it's the same thing.
And
Because-
that's where I was coming in. How are they still inflate? Like if you have a property and you're like, its base price is 550, right?
Right.
$100,000 lot premium.
yeah, $50,000 lot premium.
Upgrade. Okay, how are they still getting the value? Is it
Okay.
the values are increasing that quickly
Well,
over time?
They are, but see, builders are creating their own comps basically.
Yeah.
But here's the deal though. On new construction, every single, that's a Fannie Mae requirement actually. You also have to use at least one resale outside of that builder's control.
Okay.
So if that resale supports what the builder is doing,
Yeah.
then there you go.
Well, and keep in mind too, Dan, that every builder contract that you sign, it will say in there that you basically will bring in the difference if it
Exactly,
appraises.
right.
People don't realize that a lot of times, or they may say it to you for one sentence.
Right.
But people need to understand that when you sign a new home contract with a new home build, that it literally says in there, you're responsible for the difference if it doesn't
Yes,
appraise out.
absolutely.
Yeah, 100%. Because
So you start adding in all your upgrades on there
Right, right.
and say, I want to put in $70,000 of upgrades. And then that's why builders will make you do a certain percentage for deposit on each
Right.
upgrade. Because what if you're 9 months down the road and your financing falls through or something
Right.
happens and now they got to try to resell that property, but they're not going to get that out
Well, I'm
of
going
it.
to say this. So I had a deal that went through, and we had it appraised, and the first appraisal came in at value. When they went back, they didn't see, for whatever reason, it didn't match up the value. And new home construction. So they did have to come in the difference.
What was the difference?
It's like 19,000. You know, and I'm sitting here going, wait a second. So it was okay at the beginning, and then once we went for final inspection, it wasn't okay.
Wow.
You know.
Well, listen, it all works out when the market's going up.
Wait,
but when the market stops,
why
it goes.
did the value change at the final inspection?
Because I don't know what something happened where they went in and did some upgrades or something to the home.
Gotcha.
That shouldn't have mattered. That
I know.
appraisal was done at the time that they did it.
So I looked at it and I said, and I said, you know, it's weird because, and this is like one of the only times, but it was weird because it did come in under value and they ended up having to cover the difference. And they're like, hey, shouldn't we be able to negotiate with the builder? And I was like, that builder ain't gonna.
Welcome to builder. That's why you have an agent when you go into a new build. Because of that reason, man, we'll point those things out to you and say, hey, listen.
Another thing, Dan, I want to point out on new home appraisals. Typically, we get the sheet that shows us how much they paid for upgrades and lot premiums.
Yeah.
So I make adjustments on those. If the subject had a
that's what I think that's what it was.
$20,000 lot premium,
yeah.
And one of the comps had a $10,000 lot premium, the other one had 15 and 25 whatsoever.
Right.
I make adjustments on those and also the amount of upgrades they did. So at the bottom, I've got a really good range that tells me what the value of that property is.
I think that's what it was, is that they did some adjustments, maybe the lot
But they
premium.
shouldn't have done it after the fact, though.
I agree.
Because something's wrong there.
Yeah, I agree. It was weird. It was
Wow.
And I couldn't justify it, but it ended up getting it done.
To answer his question quickly.
Hold on. Say his question, Brett, because
I just want to get in. Our new construction home, my glasses, coming in low for appraisals. I haven't seen any that have. So I'm talking about a scenario that can happen, and people need to be aware that I have seen it happen in the past, very rarely, but just so people are aware it can happen.
They're pretty rare.
Yeah, it's pretty rare. So for the most part, no. I haven't in the past 2 years had any issues with appraisals coming in lower just because home values have gone up so much. In fact, it's been the opposite. I get, one buyer we closed last 2 weeks ago that got in a contract 14 months ago for $538 with their upgrades, and now it's worth about $650.
Right.
So no, but I'm not saying,
What about you, Andy? I mean, so let's talk a little bit about one last thing about just sum up what's happening in a very concise way with people, because we're going to have to keep moving with Brett.
Sure.
So talk about the changes, talk about what could happen and what you think may have issues.
Okay.
And what the result will be.
Well, I think the changes are fairly obvious. They're taking a very intricate process and they're trying to simplify it. Trying to save time and trying to do whatever else they're trying to do, which is, in my opinion, this is not the industry they need to make these changes to. But I've got no control over it.
Right.
I agree with you specifically with all the industries.
Values are going to suffer. There's going to be a lot of things in the appraisal industry that are not going to be accepted.
Here's the thing. It might work out for you, but it might work the opposite for you too.
Exactly.
And people need to keep that in mind.
I've talked to different appraisers to get their opinions. Some are for it, some are totally against it. The ones that are getting close to retirement age, they're probably going to retire.
Yeah.
So we're going to have a lot less appraisers.
Well, I just think people want to know too, like, is it part of just somebody that's buying a primary residence compared to a second investment? Like, is it 1 unit or 2 units or 3, or is it just there's no restrictions on it?
There's no restrictions, and that's a criteria that each individual lender is going to make. They can have their own guidelines.
Right. So basically, even though they come out with something, this is what a lot of people don't understand, is that they see something in the news. Well, banks curve that, or corporations or banks curve that where they make their own adjustments to it.
Right.
So it's interesting to see what's going to happen. I just want to say, Andy, thank you for coming on. We'll have you come back on down the road and just kind of see what things are doing. Yeah. As far as your experience out there, real quick, are you seeing, just last question is, are you seeing more appraisals coming in lower overall, or has it been pretty steady?
Not for me, no. There's some that come in lower, but again, I look at the contract, I look at the comps, and I go, man, this is way overpriced. What's going on here? But as far as appraisals coming in, it's not a common occurrence.
Right.
It happens, but it's not that common.
All right, guys. So we're going to go ahead and turn over to Mr. Brett Jenny over here, and him and I are going to discuss what's happening in the housing market. And I also you can bring this up too, if your opinion. You're an appraiser, and you've probably seen.
He'll definitely.
He knows exactly what's happening. So give your opinion on it too with us here, Andy. So Brett, what do you got for us?
What's happening, changes? Man? All right. So current inventory is low. Shocker.
Well, where are we at?
So we have current single-family residents, which are single-family homes, not condos or townhouses or manufactured homes, currently in Las Vegas, not Pahrump, not Boulder City, just Las Vegas, North Las Vegas, Henderson included. 2,189 single families and active condos and townhouses are 498 for a total of 2,728.
Well, that's more though.
That's about 1,000 more.
Yeah.
So that's hope. I
Well-
mean, it's definitely going in the right direction. It's so statistically, nationally, they're predicting that it should be, with the way things are going right now, about
Yeah.
a year and a half to 2 years before we get enough homes to amply supply the market. So right now we have less than a month supply. We should have 4 to 6 months supply in a normal market. And what they're saying that it's going to take about a year and a half to 2 years for enough homes to come on the market to start having a normal supply.
I feel that we're starting to see a trend where we're hitting that peak. And
We are.
What I mean is we're starting to, and people think, well, what is going to happen with this? Well, I think we're going to probably, it's not a, it's going to be,
It's going to level off. That's it. It's
we're
not,
also
yeah.
15, 20%. I think we're going to drop. What do you think about that? I
No,
mean,
absolutely not.
you don't think
not
that we're
even
going to,
close?
I think we're going to actually not, it's not a recession, but we're going to have a correction. I really feel that that's
A
happening
15
right
to
now.
20% drop is not a correction. That's a recession. I'm
Well,
just,
I
say,
think
I'm just
we're
saying.
headed that way though.
Yeah. So, but do-
Economy-wise.
Okay,
I don't know about a
and
recession.
so I always say this because people ask me this all the time. And I go golfing all the time, and once people find out I'm a real estate broker, I always say it's a loaded question.
Yeah, right.
Because people already have an answer in their head when they ask me. So I always say this: instead of me defending something that you're probably not going to believe anyways, because I'm a professional, I'm in the business, I'm going to
Right.
say that. I say to this, like to you right now. So why do you think that? You say 15 to 20% drop. I always say, why do you think that?
I feel that we're at a perfect storm right now, and I think the
Okay.
mindset of people, until inflation gets corrected, until that rates start to come down a little bit, and prices continue to go up, and people are willing to pay it, even though
Sure.
rates are going up, you're going to see people stepping out of the market,
Sure.
and that's what's happening. I think there's more and
Okay.
more. Now, you're going to still have people from California and other places come here and say, I'm going to pay a premium, but I still feel that people's mindset has shifted, right? The shift is, okay, I need to be, you have to have two incomes. Talked about this
Sure.
a lot. You have to have people that are willing to go into a market and can afford these prices and then afford just to pay their bills.
Yeah.
And that's not happening. So I feel like we're at that peak because
So-
of all these elements.
I say number one, I'm not saying things are going to continue to go up 15 or 20%. So level off. And number two, even with the interest rate being 5%, historically, how cheap is that? That's still
It is-
so it's more expensive than it was at 3%, but 3% was the historically lowest we've ever been in our history. So by that I mean that even in the 70s and early 80s when interest rates, and I'm not saying they're going to be, were 10, 12, 13,
yeah,
14%, people still bought homes.
Right.
Right? So number one, 5% in the relative of things isn't squat.
Yeah, but
it's something that people can number afford. Hold on. Number two, sorry, I just want to keep my thought
problem,
going.
yeah.
Number two, there's still 50,000 people a year moving here. And it's going to keep on going, and it's going to keep on going. There's less than a month supply, and we should have 6 months of supply. So even if you take a lot less buyers that come into play, that difference right now of supply and demand is so different that I don't really understand how a 15 to 20% drop is going to apply to that, because there's so much difference that needs to be make up for just to get it to normal.
What were you going to say, Andy?
Well, there's more to this than the interest rate. Yes, you're right. 5%, 4%. Those are pretty good rates still. But you're forgetting that the inflation. You're paying $5-6 a gallon at
100%.
the supermarket.
Sure.
You're paying so much more, so your buying power has gone down. So you're not going to be able to qualify
Correct.
at 5% because you're paying. I mean, you know how it is.
Absolutely.
The debt to
Debt-to-income ratio, yeah.
Right. That's going to go way up high. So you're not going to be able to qualify, and that's going to force the market to
Correct,
recede.
but there's still such a low supply and still such a high number of people moving here.
But it's gonna
that's
go
going to
up,
supersede all of that.
Yeah.
So
Well-
there's such an absorption that can be absorbed in there that I think, if anything, that absorption's going to level things off. To go 15 or 20% drop, I guess I don't understand any sort of logic that you can apply to that.
I feel that it's like this. Maybe I'll put it a different way. Is there's not going to be as many people getting as much above list. You're still going to get it.
Correct.
But you're going to start to see people drop their
Right.
prices.
I do agree
I'm
with that.
And then
seeing
the
it
other
right now
thing,
even.
the other thing too,
Me
is
too.
that this is, where do you go after you sell? Is it you
Right.
just buy new, or do you go and take a higher rate and buy a
So
smaller home?
right there, you're just continuing to prove my point.
So what that
which
means-
is then no inventory, because exactly what you said. Then
Right.
if they do sell,
Right. So what I'm saying though is just the economy is ultimately going to just slow altogether, and it's going to force prices to come down, because even the ones that are listing their home,
Sure.
they're going to be forced
Right.
to come down.
Agreed. 15 to 20%. Bro, you need world markets to move for that.
I don't know, man, because I feel
Yeah,
that
you do.
we have
Study historically.
we have a big pendulum here.
Oh yeah.
You know, we are like a roller coaster
Right.
of a market.
Mm-hmm.
We were number 3 because we're a hot state as being the prices of homes appreciating. I think it was Naples, Florida was number 1. They appreciated 41%.
Dude, crazy. So
41%.
and listen, that's the thing. Yes, I agree with that. Like, things cannot continue to go the way they were. And listen, when I say these things, this is just my experience, my opinions on my experience. I have 7 or 8 buyers right now that are around 4 to 450 that I cannot get in a contract. Bro, believe me, I would love for things to become more affordable. I would have like 8 more deals in contract right now.
Well, I'm gonna
You know?
one up on you. So I went over and this lady was asking about the tri-point situation, and you probably can attest to it. I went in there and I was like, okay, she wants to be put on a list.
Yep.
Okay, perfect, no problem. Okay, look, we got to run credit. They want to get approved by their lender.
Yep.
Cool. How many lots do you have? 9.
How many people do you have on the list?
Over 200.
There you go, man.
And I said, sir, let me ask you a question. You're telling my client to run their credit
Right.
to get approved. I go, what is the percentage of chance that they're actually going to buy a house? Oh, well, they can go to a tri-point
9 in
property
200.
over here. I go, that's not what she wanted. She wanted a property at this location. So
Yeah.
why would you encourage somebody to still
Yeah.
write or to do their, pull their credit, do the application? That makes no
So
sense.
the answer? Because they can.
Yeah. Right.
It's all about trying to get that lead.
Because they
That's-
can. Yeah.
They're looking at it as a
Exactly,
lead.
yeah.
Hey, if we get them in the system and we market them, they'll
Yep.
get another property
Yeah.
down the road. What if they have something else they like though?
Sure.
Right? So I think what it is there's false misrepresentation out there. And there is.
And the biggest thing that we have, like with our YouTube channels, because we fill new homes, which is, base price $520.
Yeah.
And we always say at the very beginning of our videos, there's a lot premium, there's this
Sure,
and that, but
right.
people somehow don't remember that and just see the price. And so everybody has to understand that whenever you see these things and they say starting at $550, I guarantee every new home build right now is going to have a lot premium.
Right.
Some are 10,000. Some are beginning 50,000.
Sure.
It depends.
Well, I want to bring something up to you. So I was at a new home and they said a spec home, right? So I said, is there upgrades? Is there a lot premium?
Yes,
And
they will.
Well, they said, this lady said, it's a spec home, so we're not going to actually have these things involved. Do they actually have upgrades and lot premium?
So
at
so
spec,
what? So here's what they do is, I would say almost all, or I should say a majority of new home builders that I know right now are going ahead and instead of just waiting for buyers to come in and build from the dirt up, they're just starting their projects because they're having supply issues. And
Right,
the
right.
supply issues
Exactly.
are costing them so many headaches
Right.
that they're saying, they're leaving a lot of it up to the sales agents and the communities. And what they do is they take an average of what the countertop that most people like, the flooring that most people like, the walls that most
Just
people
throwing
like.
it in there.
And they're taking a combination
Yeah.
of the most active
Right.
ones, floor plans that they have, and they're making decisions ahead of time, and they're picking out the flooring, and they're picking out the countertops.
That is true.
Now, they are going ahead and picking those out and starting that. The earlier that you come in and say, we've got 5 specs that are coming up, well, if you get into that the first month, you can still kind
Right,
of do
yeah,
something with flooring or countertops or something like that. But they're just going ahead and starting it. They're not waiting because they've had so many supply
It's
issues.
the structure of the home. And I'm
Correct.
Right.
But they're going to pick something, to be fair,
Yeah.
that they know is going to be able to sell that most people are going to like.
Well, but okay, so there is still the option though, and I did talk to them, is that you can still go in there as a new home and say, okay, I don't want because they do it to save time. That's
Yeah.
why they're doing. You're 3 months. You're saving about 3 months.
They do, but plus, like I said, they've had so many supply issues with, like, hey, they're 2 months down the road and these people are now just ordering their cabinets. Well, now
Yeah.
it's a
Right.
year.
Right.
It's not, instead of just ordering it now, or
Yeah.
we have a shipment that we can take advantage of now.
I mean, there's
You
people
know?
contacting me saying, hey, can you buy the model home? I mean, you can.
You
2 years
can
from now.
when the community, and that's how. And so here's a builder's dirty little secret they won't tell you. The model home looks awesome, but it is never worth it. Like,
Yeah,
first of
I
all,
know.
like appraisals
Yep.
on them probably usually never come
No,
in,
right.
Because they take everything. You could go in and build from the dirt up and get every single upgrade that they have, and you still won't have every single upgrade that they'll have in a model home.
Right.
So you're by far buying the best home in the neighborhood at the very end, and you're paying 2-year, 3-year later prices.
Right.
So builders will. Everybody wants the model home because it looks the best, but bang for your buck, they're the worst bang for your buck in the entire community.
Well, too, plus if you're not buying cash, like if you wrote into an offer, if I was going to go write an offer and say, okay, I want all this furniture in there, lending institutions don't just give you loans on furniture and stuff.
Right.
You have to actually put that on the side
Yep. Right.
or write it somewhere separate, and you have to give the monetary value of it. So look, you can do these things. I know a lot of people have written into the contract, but there is some issues, and I've seen them come up. But to talk to you about a little bit on that builder is they do that to save time. But like you said, a lot of this stuff, they're just not even putting the refrigerator in.
No.
They're not even putting some of these appliances in because it takes up time.
Most of them are on back order.
They are on
They're
back
sitting
order,
on a ship in a harbor somewhere, man.
I just
waiting for
did
the red
one.
tape.
$2.5 million house. There was no Sub-Zero. None of the appliances were in. So they ended up doing is just put a regular little fridge in there
Until
and a stove just to get it closed.
crazy, man.
That is
Imagine
crazy.
buying $2 million home and you got a little rig.
Show us this chart, Brett. So you brought this chart up.
All right, so this will kind of give people. Let me get my glasses on properly. Give people an idea of what kind of we're talking about the market. Where are we at? Where's the?
There you go.
There we go.
Show us, Brett.
So these are medium home prices.
Right.
At the beginning of 2019, we're at 270,000 in January 2019, and now in March 2022, so 3 years later, we're at 380
Wow.
for the average home price. Now you're looking at a 0.6% increase, but even further, look at this. We're going to look at new listings that came on the market for the last 3 years.
Wow, look at that.
It went up. COVID. Look at COVID. Right here is COVID.
That's
if anyone
COVID.
can
Wow,
see.
look at that.
And then we've recovered some, but that's nothing. And then you want to do home for sales? Look at that.
Wow.
January 2019. So in September 2019, there were almost 13,000 homes. Now there are 5,700.
Wow.
And so that's when COVID hit right here. And once COVID hit, look at that. That's the past 3 years. Now let's get to days on the market.
Go ahead.
Look at that son of a bitch. January 19th, average 15 days. And then you went up to January, right before COVID, 28 days in the market. And now 8.
Wow.
Holy
I'm surprised it's not -8.
crazy, dude. Look at that. 8. And then even, where was it? Closed sale, price per square foot. Look at this.
Wow.
Price per square foot. In January 2019 was $157. That was average. And now the average is $219.
Yeah.
I remember in 2010 when all the foreclosures, there were like ultra luxury properties now in guard gated communities in Summerlin that were selling for $250 a square foot.
Yeah.
That's insane, man. So anyways, that's Brett Jenny. I'm sticking to it.
That's it.
No, so I mean, as you can see, the past 3 years, it's been and that's what I'm trying to say. Like with the market going down 15-20%, like I get that it's gone up tremendously, and it can't keep on going up like that.
Right.
But we all know there's real statistics of real life things of behind why that is.
Mm-hmm.
You know, we've been in the foreclosure market,
Right.
we've been in this market, so we know the difference. And that's what I'm saying is like to go down 15-20%, man. How? Like, because I know it's great to sound, you know, but what needs to change are the homes on the market.
Well, listen,
simply
you
put.
can't keep going this hot, this fast. And that's all I'm
Agreed.
saying. We're
So-
20%.
But
There's
that's
an
why
article-
we'll curve off and we'll
but listen,
flatline.
there's
but
an
to go down
article that
15
said that I say there's double digits here in Las Vegas. There's an article out that says that we're only going to appreciate about 5% this year because this is slowing so much, so fast that this market is going to slow down and we're only going to appreciate, still appreciate, but very small.
Right.
So let's rewind the podcast to about 3 or 4 months ago when everyone was talking about 15-20%, and I said 3 to 5%. I know.
Well,
It's 5%.
I
That's a
understand
great
that.
number.
It's still appreciating, but what I'm saying is,
Or even zero.
You're saying 5% going into next year. couldn't you think that we would start to go into, because they're saying that this could be a year and a half, like you said.
Right,
Yeah.
right.
The next 6 months, you're going to probably see more supply of homes coming on the market.
hope
because
so.
sellers are starting to say, hey, I'm going to still try to sell. You're at your peak. People know.
Or yeah,
right?
we think they've gone up as much as they are because a lot of times, when you go on the news and you see home prices, new price this month, you're like, yeah, I'm thinking about selling, but I've got some time. But when everybody as a whole starts to feel that maybe things are capped,
Yeah.
and we've gone up as far as we can, that's when hopefully more people, and I'm all for it. Anybody who wants to sell, let me know. I mean, I'll sell your house in like 2 hours.
Where do we go though?
To my website, brettjenny.com.
But I mean, but listen, anybody can take a listing, and I'm not saying that you couldn't sell it, but you also have to understand that if somebody comes in and there's a price difference and they can't come up, I have clients that don't have the extra money, right? So I'm feeling you got the rates.
Dude, I have 8 buyers right now that I told you that I can't. That's because they don't have, they're qualified for a loan. They have a down payment, but they can't bring in $15,000, $20,000 difference. I have like 8 of them right now, man.
So I want to talk a little bit. Do you have anything else to say about the housing market? Like, what else do you want to say?
My name's Paul, this between y'all.
So look, let's talk a little bit about the rates and what's happening here with the impact on what people's mindset are. Do you feel like the economy, it goes as the rates go? Meaning if the rates are good, everybody's in. You look at refis, I'm doing cash out. If you guys are out there, do you guys want to do refis? I am. Do
Refis
both.
are dried up.
Well, they're completely dead, right? And I've seen it. Now, I have people that still come and ask me for doing stuff like that with pulling out money. But you guys look at these rates. People are people now looking at a total different direction by buying
I think
homes.
people are holding tight right now.
I mean, you see this market. Did you see rates when they were like 10, 15, 20%, right?
Oh yeah.
Yeah,
People still bought homes.
They still buy homes. Do you think that's going to keep happening?
Well, again, there's a lot of different factors though to consider. It's one thing for the rates to be 10% or whatever, but the economy, you have to look at the economy.
Correct.
What's going on? We were not paying $5-6 for a gallon of gas. We're not paying $10 for a gallon of milk. Have you seen that? I was shocked when
But
I
it
saw
was 1980. Prices were cheaper then.
Well,
I'm just
I mean,
kidding.
Well, I'm going to say one thing about that. So the Fed raises rates, and they're doing it strategically this time. Instead of
Right.
them doing it like 1981, you were probably saw it. They just took the Band-Aid off, and they said,
Yeah.
you know what? We're just going to go ahead and just take it on the chin.
That's what you need to do.
Let the market has to kind of heal itself, right? To a point, right? It's got to come. They're trying to say, well, we're going to massage it this way in hopes that people still do this. And if it goes this direction, we're going to massage it the other way, try to do a balancing act. And that, to me, I just feel like it's a slow process of pain. Because
You're robbing from Peter to give to
It's just a
Paul,
slow
and you're
process.
passing the buck, and that's all you're doing, and you're not resolving anything.
well, by slowing down the real estate market, that's not, in my opinion, that's not going to fix the entire economy. It's going to slow down sales and purchases of homes,
Right.
but the economy is still where it is.
Yep.
There's other things that need to happen for the
Yes.
economy to come back up. Gas, for example,
Yeah.
has to go down.
right.
Because markets are psychological.
Yeah,
Right?
sure.
I mean, it's the same thing where so people still bought homes when interest rates were 12 or 13% because it was a group of people that had to.
Right.
Right? Based on their circumstances. It wasn't everybody as a mentality as a whole. That's like it's the same thing with like unemployment. They're like, "Oh, unemployment's at like 8%. Oh my god."
Right.
Well, the difference between unemployment at 8% and really good unemployment at 2% is 6%. What's the 6% difference in the entire population of 350 million people? A couple million? But the mentality of it is that, holy shit, we're going to hell in a handbasket.
Right.
Yeah, I don't know. To me, I think
know?
you look at the economy as a whole, and you're like, well, there's a lot of challenges that we have to look at. We all know that inflation is not good for any economy. And as far as when do we think that this is going to correct itself? I don't know. I mean, every little
1.5 to 2 years.
I'm going to say it's not even just gas and it's not milk.
I'd say 4 years.
I would say that every little thing out there
Say next election.
is increasing.
Well,
It's
of
not even.
course.
It's like the smallest things you could think of. Like, oh, it's our excuse to raise costs. You go get your nails done.
course.
You're a girl. Hey, it was 40. Now it's 60.
Yeah.
Right.
You go out. You got to buy.
Well, to be fair,
an oil change. It was $100. Now it's $191.
Well, to be fair, it's just passing on the buck for most places. It's not like someone wants to double their price. I should say I don't think people are doubling their price out of greed. It's because they're passing the buck.
Yeah.
But that goes back to the economy.
But are they
expensive.
using it as an excuse? I know. Look at businesses.
I don't think they're using it for an excuse at all.
Businesses still have to. If they have employees, they got to pay their employees.
Of course.
They got to pay all their bills.
Okay.
Right? And
Then
run a shop.
Then why do I go to Teriyaki Madness and I order someone behind the register and they still want me to give them a 15% tip? I'm paying the employees now too.
Do you really give them a 15% tip?
They ask for it. 15, 20, right there in the machine. It's like you used to tip people when they would bring you food.
Right.
Now they're just doing the machine and they want you, same thing with Five Guys and all these other places.
I could be biased to that, and I'm going to tell you why.
So what I'm saying is I don't think they're doing it because they want to put the squeeze on us. I think they're passing the buck.
Yeah.
Well, I'm going to say this, but
know?
I think that was before, though, wasn't it? I mean, they did that before the whole problem.
Go to Five Guys. I was there the other day in downtown
So,
Summerlin.
look, I have a heart for that. I'm going to tell you.
And I love Five Guys. It really pissed me off.
If you're out there and you got people working hard, and I see somebody in the back just go and work, I don't have a problem giving somebody a 15% tip. Now, I used to be that guy. So I was the guy that was like starting in college.
Be quiet about that.
I went from cashier to cook.
So if you're bringing me my food, then I'll give you a tip.
You know where the
bring me my food and I'll
bring
give you a tip. But why am I tipping you now for standing behind the register, which you're already getting paid for? That's on your boss. Your owner wants me to pay your salary now too.
No, I don't think it's that. I think it's a combination of people
get him a tip if you're bringing me service. You're bringing me food.
They think this is a restaurant. Which it is, and
it's
I think
a different discussion. Never mind. It's just
what do you got to say about it?
Hey, I do it because I don't want the employee to suffer, but I just think it's crazy to me. It's
I just say
like
pay
a
it
whole
forward.
new concept.
Pay it forward. And I'm going to tell you, you never know.
That's just your food bill.
I might be flipping burgers down the road. You just never know, Brett.
Oh, I've been in that position most of my life. Don't get me wrong, man.
We've all done that.
Yeah, man. You act like I came from money or something, dude. I come from the farm, bro.
You came off some cheese farm.
I came off some cheese and hay bales.
You guys have anything else to say? Because we got to end the show here. I want to say thank you guys out there. Everybody out there, we're trying to really make this show as prosperous and educational and have the content for you guys. So hopefully you're enjoying some of the things that we go through and our challenges. Again, this is the most real behind the scenes information regarding financing, real estate, money talk entrepreneurs. And we bring in entrepreneurs because we want to get their mindset from it, right? What do they think about what's happening in the economy? What are their challenges going on with business?
How do we get a hold of you, Dan French?
Well, you get a hold of me by going to right here, the French Workbench Podcast, and subscribing to the channel.
Okay.
And hitting the like button.
And do you have a website?
I do have a website. And you're going to get that website at the end of all this, Brett.
I just like
But I'm going to say this. We're trying to put that out. If you guys please help us out. We're trying to get to 1,000, right? And I want to thank Andy Papasian. Andy, you're always a pleasure, man, when you come on.
Appraiser extraordinaire.
Likewise, yeah. There you go.
And he's somebody that gives us an insight, and I think we vibe well with Andy. I really can hang out. I can hang out with Andy, have a beer.
Yep.
There you go.
You know what I mean? So
I can have a beer with you, go shoot some shit. I love it, man.
That's it.
all right, guys, that's it. We're going to end the show. If you guys have any questions, please let us know. We'll have all our comments in the comment section, and we'll see you guys at the next one.
There you go.
Thank you for watching the French Workbench Podcast. You can find us here every Tuesday at 6 p.m. and Saturday mornings at 10 a.m. to find out all the information on real estate and financing here in Las Vegas. Also, check us out on our LV Home Professionals website. You can find your future home there, a lot of good information, and you can find us on audio-only options through SoundCloud and